Insurance Regulatory Authority has assured policyholders at Directline Asurance Company Limited that all policies are safe and the insurer remains liable for any claims. This follows a move by Samuel Kamau Macharia, a media mogul and one of the main shareholders, that the insurance firm had closed down and fired all employees.
On Monday, June 10, 2024, SK Macharia, the chairman of Royal Credit Limited, declared that Directline Asurance had ceased operations, dismissed all its employees, and dissolved its board of directors. It was an announcement that shook the Kenyan insurance sector. But in a surprising twist, the Insurance Regulatory Authority immediately countered Macharia's claims. In a swift and stern rebuttal, the IRA declared this statement null and void, emphasizing that only they, as the regulator, had the authority to shut down an insurance company. The battle lines were once again drawn on what has been a messy, convoluted fight for control of Kenya's leading PSV insurance provider. The questions that one may ask out of this particular fiasco is that why would SK Macharia, one of the most powerful media moguls in the country, make such a drastic declaration about Directline Asurance? A company with over 60% market share in the public service vehicle PSV insurance sector and still profitable. What led to this series of events, and why will Directline Asurance stop issuing out policies when it seemed to be thriving? Today, we unravel the dramatic fiasco within Directline Asurance, Kenya's leading PSV insurance market leader, and the complex web of legal battles, boardroom coups, and personal vendettas that are fueling its slow but gradual collapse. Welcome to the Business Graveyard, where we tell stories of brands and businesses that have gone under or are struggling in order to gain insights and lessons so that history may not repeat itself in your entrepreneurship undertaking. Subscribe to our channel, hit the notification button so that you can be updated on our future videos. Also, don't forget to share your views and feedback through liking and commenting on the video.
Sasa mnaweza mkakava mali na bizenu zote kutokana na risks tofauti.
Naweza kawa construction yangu, mashini, mafundi
na shule yangu, wanafunzi, wafanyikazi, basi.
Na in case mimi nipate ajali.
Omera, what about my palatial residence?
Nama achia Directline.
Do more na Directline. Visit your nearest branch, agent, broker or bank assurance partner today or SMS Bima to 23454.
Directline. Every day is sure. Do more.
Directline Asurance was founded in 1998 by John Gishia Macharia, the son of media mogul SK Macharia, the powerful chairman of Royal Media, the company behind Citizen TV, Kenya's biggest television station. John saw an opportunity in a sector many had long ignored, the public service vehicle PSV insurance market. His vision: to provide a much-needed service to an industry that was often shunned due to high risk. Under John's leadership, Directline thrived. The company grew into a titan of the industry, capturing a dominant 60% share of the PSV insurance market. For 2 decades, it was a story of success until tragedy struck on April 27, 2018.
Nairobi businessman John Gishia Macharia has passed on. The late Gishia is son to Royal Media Services chairman Dr. S.K. Macharia, and Gishia was until his death the executive director of Directline Insurance Company. Gishia succumbed to injuries sustained from a road accident along the southern bypass. He passed on at Karen Hospital, where he had been rushed. We at the Royal Media Services family send our deepest condolences to the family, and may God rest his soul in eternal peace.
John Macharia tragically lost his life in a horrific car accident, his Porsche Cayenne colliding with the stationary SUV on Nairobi's southern bypass. His death not only sent shockwaves through his family but also marked the beginning of a power struggle that will eventually lead to the slow decline of Directline Asurance. After John's death, his father, SK Macharia, took control of the estate. At the time, John's only son, Adam Kamau Macharia, was just 16 years old, too young to manage his father's empire. SK Macharia stepped in to manage John's estate, which was valued at 1.2 billion Kenya shillings. This included John's majority stake in Directline Asurance, properties, and other assets. Fast forward 2 years to when Adam turned 18 and the real battle for control began. Adam, now legally an adult, wanted to take back what was rightfully his father's estate, including his 70% stake in Directline, but SK Macharia wasn't about to let go easily. Adam took his grandparents to court, seeking control of his father's assets. The court documents reveal the scale of John's estate, which included shares in 6 companies, including Directline Asurance, 9 vehicles, and 5 properties. Adam argued that as the only son, he was the rightful beneficiary. Meanwhile, SK Macharia fought tooth and nail, claiming that Adam wasn't mature enough and had been swayed by incompetent advice. The court eventually ruled that SK Macharia, Adam and his mother, Lisa Anyangwa Menya, will jointly manage the estate. With the legal battle still ongoing, SK Macharia shifted his attention to Directline Asurance itself. In 2019, he staged a boardroom coup, declaring himself chairman of the company. In a letter to the staff, SK Macharia claimed that he was representing the majority shareholders, including himself, and his interest to his other companies, Royal Media Services and Royal Credit Limited. He ordered the staff to continue their duties under his leadership. Insurance Regulatory Authority wasn't having it. They stepped in, freezing SK Macharia's self-declared takeover, insisting that he was a minority shareholder, despite his claims. The regulator rejected his coup, further entrenching the power struggle between SK Macharia and the company's board of directors. Court documents during SK Macharia's case with his grandson Adam revealed the ownership structure within Directline Asurance, which has been a bone of contention by SK Macharia. The documents reveal that at the time of John Macharia's death, he was the executive director at Directline Asurance. Adam also revealed during the case that he was aware that Directline Asurance had a total of 15 million shares distributed amongst 10 shareholders. This included Janus Limited, Sure Invest Limited, and Steny Investment Pty Limited, each holding 3 million shares, which is approximately 20% each. Other shareholders included Triad Networks with 2.9 million shares, AKM Investment with 1.5 million shares, Royal Media Services with 1.4 million shares, and Royal Credit with 997 shares. It's worth noting that Royal Media Services and Royal Credit are owned by SK Macharia, which amounts to 10% shareholding, as alluded also by the IRA. In totality, the shareholding Adam claimed that his father owned through the various investment vehicles in Directline Asurance was 70%. Frustrated by IRA's decision, SK Macharia took drastic action. He accused 14 directors of Directline Asurance of fraudulently transferring shares worth billions of shillings. He even called for their prosecution.
A case in which Royal Media Services chairman Dr. SK Macharia is seeking to institute private prosecution against 14 intended accused persons over criminal offences relating to shares and finances at the Directline Asurance Company Limited has commenced at the Nairobi Magistrates Court. The application before Principal Magistrate D.M. Dungi has been filed against Police Inspector General Hilary Mutyambai, the Director of Public Prosecutions Nurdin Haji, the Director of Criminal Investigations George Kinoti, and Attorney General Kihara Kariuki. In the court papers, Dr. SK Macharia and Directline Asurance Company accused the Director of Public Prosecutions Nurdin Haji of declining to prosecute the 14 intended accused despite the overwhelming evidence of criminal offences relating to shares and finances of the Directline Asurance Company.
But the Director of Public Prosecutions, DPP, dismissed the charges, citing a lack of evidence. As the power struggle deepened, SK Macharia's moves became much more desperate. In June 2024, he made a dramatic announcement that the company had ceased operations and would no longer issue policies. He blamed the shutdown of alleged embezzlement of Kenya shillings 7 billion by its former directors, accusing the IRA of failing to act. But once again, the IRA stepped in, invalidating SK Macharia's statement and assuring the public that Directline Asurance was still operational. Behind the scenes, however, more troubling details were emerging. Court documents revealed that SK Macharia had allegedly transferred 400 million from Directline Asurance accounts to finance a real estate project, an authorized transaction that could lead to criminal charges. The IRA claimed that SK Macharia had hurriedly announced the company's closure to avoid further scrutiny.
A request by the Royal Media Services boss Samuel Kamau Macharia to Diamond Trust Bank DTB to wire 400 million shillings from a bank account belonging to Directline Asurance Company Limited to a housing firm which he owns has triggered a 5-year-old conflict with the insurance regulator. The turmoil began in 2019 when the Insurance Regulatory Authority IRA froze the company's operations due to a disputed ownership structure. The legal battle for control of Directline Asurance pitting media mogul Samuel Kamau Macharia and the Insurance Regulatory Authority IRA has revealed the insurer's true ownership is uncertain, with both parties keeping conflicting shareholder records. The regulator has previously described Macharia as a minority shareholder with a 10% stake through Royal Media Services, which does not entitle him to stage a corporate coup. SK Macharia has disputed the IRA's list of Directline shareholders, with the businessman saying that he and his associates are majority shareholders and therefore have a right to call the shots in the operations of the troubled insurer. The position egged on the businessman on Monday evening to order closure of Directline, prompting a furious reaction from the regulator. IRA Chief Executive Godfrey Kiptum has rubbished the move, saying the insurer will continue to be operational. Kiptum said in a press statement to explain the status of the firm, and I quote, "All policies insured by Directline Asurance Company Limited remain in full force and effect, and the insurer remains liable for any claims arising therefrom. All policyholders of the insurer may continue with their operations in accordance with their insurance contracts."
As the matter is still pending in court awaiting hearing and ruling, SK Macharia made another statement on September 10th declaring that Directline had stopped issuance of policies.
In a statement, Royal Credit Limited moved to set the record straight, with Dr. SK Macharia restating facts around the founding of the now contested Directline Asurance Company. Dr. Macharia stated, and I quote, "We are the original and bona fide subscribers who incorporated Directline Asurance Company and were given approval by then Finance Minister to do business, and of which the company was licensed by the regulator IRA. Royal Credit further says at no time have we sold or allotted shares to anyone or entity. Allegations of shareholding dispute in court are based on a fraudulent CR12. The fraudulent CR12 is misleading the public and the courts. IRA CEO Godfrey Kiptum had responded to an earlier statement by the Royal Credit closing operations of the Directline Asurance Company. Kiptum said the IRA was aware of the shareholding disputes in Directline and that the matter was before court. Royal Credit had stated the Directline Asurance Company was no longer subject to regulation by IRA under Insurance Act Cap 487 or any other law. The Royal Credit statement further says anyone issuing Directline Asurance Company policies is doing it without consent and authority of Directline Asurance Company or its shareholders. Any member of the public taking such policies does so at his or her own risk. Directline further warns that IRA shall be held liable to any incident or liability that may arise from such a fraudulent policy through fraudulent CR12, which it knows is fraud. Royal Credit has also told banks holding accounts for Directline Asurance Company that any payment of money that has not been authorized by the shareholders shall be responsible for such and shall be called to refund with full interest.
So what does it mean for Directline Asurance? Is the company truly on the verge of collapse, or will it somehow pull through? As the legal battles and financial scandals continue to mount, only time will tell. But what lessons can we as entrepreneurs and business leaders take away from this particular cautionary tale? Here are my 5 lessons from the fall of Directline Asurance. 1. Corporate governance is critical. Lack of clear leadership, succession, and internal disputes can bring even the most successful companies to their knees. 2. Don't ignore regulatory frameworks. Violating laws and engaging in unauthorized transactions can lead to regulatory intervention and criminal charges. 3. Legal battles drain resources. Prolonged court disputes sap financial and human capital, leaving the company vulnerable. 4. Transparency is key. Public announcement without proper legal backing can create panic and tarnish a company's reputation. 5. Plan for the unexpected. This sudden loss of a key leader like John Macharia highlights the importance of a solid succession plan in place. Will Directline Asurance rise from the ashes, or will it be buried in the business graveyard? Stay tuned as the saga unfolds. Don't forget to subscribe, share your thoughts in the comments, and hit that notification bell to catch our next episode. Until next time, this is the Business Graveyard, where we learn from the fallen.